As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a soulful Sunday. Absolutely, it is. It is January 19th, 2025. All right. This is the weekly trade watch list. All right. Delayed but not denied. That's what we're going to call that. Delayed but not denied. All right. And simply being, this is the first time. This is the first time in 12 weeks that we have not achieved a trade that has done at least 10% or more. Now, has the market produced a trade that has done 10% or more? Absolutely 100%. But it's the first time in 12 weeks that we have not been able to catch one. So, did call out this trade right here. Simply being with my studying as the market was moving, did call out this particular position. Not call it out, but I took this particular position. Let me say that. Took this particular position, and right here is where took 50% partials, stops with the break even, and then obviously let the rest ride all the way to this 10% TP. But obviously, it didn't make it because the market had other things that it wanted to do, which is a-okay. All right. So now we're going to get in to, we're going to erase. We're going to erase and mark up the charts again. I'm going to erase and mark up the charts again. This right here was a position that I did not take, but I had an alert on it. See right here, this actual zone on the 1 hour time frame, I had an alert on it. And by the time I went to go look at it, obviously it just, wicked the area that I had the alert on. And then obviously it shot up, right? So my thing is what I'm going to incorporate now is I'm going to put into my trading plan and my analysis every single trend that's on every single time frame. Answer my own question. Hey, what's the trend on this particular time frame? Hey, what's the 10 on that particular time frame? So that's what I'm going to incorporate, and then I'll be able to formulate a more better analysis. So I'm going to show you what I'm talking about. So first of all, I'm going to erase everything on gold and start with gold. Okay, that's exactly what I'm going to do. Erase everything on gold and start with gold. Okay, so my thing is, hey, answer my own questions. Hey, every single time frame has its own trend, right? Every single time frame has its own trend. It doesn't matter uh, if it's the same exact pair. So it doesn't matter if it's the same exact pair. So my thing is this. Okay, here we go. On the monthly time frame, we're live on YouTube. The YouTube link is in my bio. All right. So we know on the monthly time frame, we're absolutely the market is creating higher highs and higher lows. Without a doubt, this market is bullish. So I'm going to mark it up. Hey, this is a break of structure. Okay. The lower the time frame, the more often the trend changes. It's like it speeds up. The trend changing speeds up. The higher the time frame, the slower the trend changes. Okay. The lower the time frame, the more often the trend changes. Okay. So I can't show my screen on Instagram. I can show my screen. I'm live on YouTube. So if you go to the link in my bio, you go to the YouTube link in my bio, what you do is go to my bio where it says Zoom. It says Zoom link plus one more. Click that link and then you'll see my YouTube, and you'll click on YouTube. You'll be able to see me on YouTube. I'm showing my screen on YouTube. I'm unable to show it on Instagram. But Instagram can hear me, but they can't see me. YouTube can see and hear me. All right. So this right here is no problem. This right here is a monthly breaker structure, right? The market moves in market price cycles. So you have a distribution right here. This is a redistribution. This right here is accumulation, reaccumulation that did what? Broke this old structure, led to a new high. All right. So now the market reacts off of engulfing candlesticks, bullish and bearish engulfing candlesticks. Bullish and bearish engulfing candlesticks show the completion of a market price cycle. All right. So that's where the market creates if it's bullish, the market creates the higher highs and higher lows off of engulfing candlesticks. So if it's bullish, the market is going to create a higher low off of an engulfing candlestick. If it did it, it's like, okay, it's creating its own higher low. If it's creating its own higher low and is not part of that higher low is not mitigating an engulfing candlestick, it's not mitigating and retouching an imbalance, then more than likely that higher low is going to get liquidated in the future. Okay, because the market is all about wanting to be efficient and not wanting to be inefficient. It wants to refill the imbalances in the market. Excuse me. So we know that on the monthly time frame, we are indeed bullish. All right. So I'm marking up my structure points. That's a low, accumulation, reaccumulation, breaker structure. It's a high. That's a low right here. So monthly breaker structure above. All right. So let's see. This is a low. Let's see. This will be the monthly high. That would be a low. You know what? Hold on. Yeah, I'm gonna mark that as a low. All right. Then we got the engulfing candlestick. Let's see. This will be a high. That'll be a low. Push up some more. This will be a high. This will be a low for right now. All right. On the monthly. So now I'm going down to the weekly. All right. Now I got to mark up the structure that's on the weekly. Now, sometimes the actual structure that I marked up on the monthly is going to be part of the weekly. Okay. So what I'm going to do is this. All right. Let's see. On the weekly, let's see. We have the market creating this high right here. Oops. Okay. Market created weekly structure point. Boom. Created this low right here. Let's see. It's got that high. Broke structure right here. Created a low. Let's see. Popped up right here. Went down low. Broke structure. Created another high right here. All right. Let's go down to the daily. See what we're looking at. All right. Mark created that low. Let me see what's up. All right, I'll put that right here. You know what? Let me see. Yeah, I'm put that right there. All right, so now on daily, go to red. You got low, high, higher, low, breaker structure, higher, high. Okay, higher, low. The market created a high right here, higher, low right here. Market broke structure, created a high. Come down to the 4 hour. All right. Okay, come down to the 4 hour. So then we have high right here internally, 4 hour. Then we got a low, breaker structure, high, then another low, a breaker structure, high, then another low. Okay, breaker structure, high, then another low. Push up, boom. All right. Now we have the market creating this let's see, low, high, right here, 4 hour, broke lower, right here, high, broke lower. All right, let's go down to the 1 hour. All right, see what's up. So now, okay, cool. Engulfing candlestick. Let's see what's up. So we got a 1 hour engulfing candlestick right here. This is the last imbalance that this is the last bearish move that imbalanced right here. So then we have this one right here. This is an open imbalance right here that the market can react off of and create a accumulation. All right, so I'm gonna zone this out on the 1 hour and say, hey, this is a 1 hour demand zone. All right, you see how this last respected this particular area, accumulated, reaccumulated, this broke structure right here. So this is a break of structure right here on the 1 hour, since we're on the 1 hour time frame. So boom, 1 hour break of structure. All right, so it's a possible area of interest where the buyers can come into the market. All right, so this is dope. All right, so the sell, if we're looking at a particular sell, right? So we got this open supply zone right here on the 1 hour. See this engulfing candlestick? Yeah, we put it on the weekly, but you got to go down into the lower time frames to be able to see the unmitigation, some of these candlesticks. So bam, remember the market moves with intentionality. The market moves with intentionality. So every single thing, every single candlestick, every single move, or every single time frame is super duper intentional. Okay. So just a bit of an intermission. The two people that's on the live stream right now, shout out to you. Place in the comment section, what's your name? Comment in the comment section. I like to shout people out because people that take time out of their busy schedule in order to tune into my live streams, listen to what I have to say, taking copious notes. For whatever reason why you here, God placed you here, right? And you took time out of your business to come on the live stream. So I appreciate you for that. And I want to, give you your flowers. So the two people on the live stream, you can comment in the comment section, please. Okay. My two people in the comment section. We live on YouTube. YouTube link is in the bio. YouTube link is in the bio. We live on YouTube. Weekly trade watch list. So could you please comment in the comment section on the live stream? Whoever's watching the live stream. All right. So here's the deal. This is what I see as of right now on gold. Okay. We got this supply zone. We got this demand zone as of right now. What I see, distribution, redistribution right here. So right here could be an area of interest where the sellers come into the market because we got an engulfing candlestick, right? It's possible. So let me see. Let me see what I want to do. I believe this is going to be liquidity and get liquidated. So I'm going to look at this as liquidity because I believe that the market's going to liquidate this and then sell from here in the future. I don't know how, I don't know when, but just the way I'm looking at how the market is printing. So this engulfing candlestick right here that was unmitigated, the market took its low right here. See how the market took this low? Took that low out. So that low was liquidated. So boom, took this liquidity right here. Now it's reversing. Okay. So now let's see let's see, what is the trend on the 1 hour? So let's see. Let's see. Boom, liquidated that low. Take out the market. Take out the old low. Create a new low. Okay. Pushing back up on internal time frame. So let's see. The lower the time frame, the more often the trend changes. So this is the question. We're let's see. So we're bullish on the weekly. We're bullish on the daily. Bullish on the 4 hour. Let's see. No, we're not bullish on the 4 hour. We're bearish on the 4 hour. We're bearish on the 4 hour. We're bearish on the 1 hour. So now we're bullish on the 5 minute. So M5 is what? Low. We got a high, higher low, and you got a break of structure right here. Market create another high right here, create another low right here, and you got another what? Break of structure. So you're bullish on the 5 minute. Bullish on the M5. So now that the market took out this high, you're anticipating the bears to come in. And this is an area of interest where the bulls can take back over right here, because this turned out to be an engulfing candlestick. So you would zone this out like this. Now you got to depend on what type of trader you're going to be. Like, hey, okay, cool. I'm looking for a sell because the market broke an old high and led to a new one. Okay, but that sell could be stopped right here. That's the reality of what can happen. So we're bullish on the 5 minute time frame, and we're about to go bearish on the 1 minute eventually. Shout out to the person that's on my live stream watching. Appreciate you for taking time out of your busy schedule. So now that the market has broken an old high, led to a new one, we're expecting the bears to come in on the M1 time frame, at least minimum, to sell it to this area. Don't know if the bull is going to take over in this particular area, but we'll see. So this is a divergence, right? And the market is going to if the market breaks above this high, it will cause a change of character. Okay. So same thing as an accumulation. So you can see how the market is doing what? Slanting lower right here, right? And slanting upward on the RSI. Right here like this. That's in the same exact area. That's what you call the market is diverging, but it hasn't changed character yet. This is the area that is this is the change of character area. Okay. But here's the deal. Depends on if the market is going to create a reaccumulation internally or the reaccumulation externally after the change of character. This is an area of interest right here where, because this is an engulfing candlestick, this is the area of interest where sellers could come back into the market and sellers market back down. Okay, on the 5-minute time frame. So got to be cognizant of that area. This is an area of interest right here where the bulls can do what? The market can distribute, redistribute, and the bulls can do what? Take over right here with a higher low. That's possible. So when it comes to incorporating Elliott waves, a divergence is always comprised. A divergence is always comprised of waves 3, 4, and 5. Now here's the deal: is what type of 3, 4, 5 waves are there? So here's the deal. What I'm saying is this: if we have a 1, 2, 3, 4, 5, right? The 3, 4, 5 is always forming a divergence. Okay. But you can have a 1, 2, 3, 4, 5 wave 1. You can have a 1, 2, 3, 4, 5 wave 3, a 1, 2, 3, 4, 5 wave 5, a 1, 2, 3, 4, 5 wave A, or a 1, 2, 3, 4, 5 wave C. All right. So here's the ABC that I'm talking about. Hold up. A, B, C correction. So you could find 5 waves in this wave 1, 5 waves in this wave 3, and then 5 waves that make up this wave 5. You also can find 5 waves that make up this wave A and 5 waves that make up this wave C. That's just the rules that comes along with Elliott waves, all right? But depends on how the market prints is going to identify what type of wave it wants to be, okay? So what I'm saying is this. This is a wave 1, wave 2, because this low respected this first wave. This would be what? A 1, 2, 3, 4, 5, break above an old high, create a new one, wave 3. Pullback would be an ABC correction, wave 4. And then go up and do what? Create a wave 5. But here's the deal. You got to identify if this is a 1, 2, 3, 4, 5, what type of 1, 2, 3, 4, 5 is it? You get what I'm saying? What type of 5 wave move is it? Is it a 5 wave 1? 5? But see, here's the deal. So, like I said, on the 5-minute time frame, you can see this as a what? Wave. Oops. Hold up. You can see the divergence coming in. This would be wave 3. This pullback right here would be wave 4. This push down right here would be wave 5. Right? So if you want, the thing about to incorporate Elliott waves, I'm incorporating the rules, the discipline that comes with Elliott waves, not the fib. Okay. So what I'm saying is this: I can the only tradable waves, according to the rules of Elliott waves, are these waves right here, from here to here, which is wave 3, from here to here, which is wave C. These are the only tradable waves. All these other waves are waves to let the market print and reveal itself and identify and reveal to the trader what we want to do and what do we want to be. So that creates discipline. So after a 5-wave move, they say, hey, let this wave come out and you count how many waves in it. Now, wave A can be what? A ABC A wave or a 1, 2, 3, 4, 5 A wave. Now, if it's an ABC A wave, if 3 waves make up this purple A wave, then we're going to be looking at one of the 3 different versions of a flat pattern. Okay. Now, if this A wave is a 1, 2, 3, 4, 5 A wave, then we're going to be looking at a zigzag. Make sense? Y'all cool with that? That makes sense? If you're not part of my free Telegram group, you're not going to understand what I'm talking about. Shout out to the 5 people on the live stream, though. Any questions, problems, or concerns? Oops. All right. So what I'm saying is this. I see this as a wave 3, 4, 5, right? Okay. Now this is revealing to me that this may be a 1, 2, 3, 4, 5 A wave. Now, if indeed this is a 1, 2, 3, 4, 5 A wave, then I'm going to be looking for the B wave. The wave B is always made up of three waves, which is a smaller A, B, C correction. Okay. These three waves right here, the orange waves, the purple B wave, what makes up the purple B wave and its pullback retracement is a smaller ABC. All right. Always. It'll always be an ABC. This is not made up. This wave is not made up of a 1, 2, 3, 4, 5 because it's a retracement wave. It's a retracing wave. So my thing is that, okay, I see that the market has done, okay, this is a 1, 2, 3, 4, 5. Okay. I see that the market is going bullish on the 5-minute time frame, but let this wave come out. So it's revealing to me that this possibly wants to be a what? 1, 2, 3, 4, 5 wave, a 5, 1, 2, 3, 4, 5 A wave. And then what I will look for and anticipate is a ABC B wave. So, excuse me. So what I'm anticipating, excuse me, the market has broken an old high and created a new one. Now on the 1-minute time frame is going to create a bearish divergence. On the 1-minute time frame, what up, LT? On the 1-minute time frame, I'm looking and anticipating that the market creating a bearish divergence, because what it wants to do is what? Finish that A wave, right? What I'm anticipating is the market finishing this A wave. So this is what I'm talking about. I'll show you exactly what I'm talking about. Let's see if I mark it up from here like this. Say this is wave 1, 2, and then the divergence is always made up of waves 3, 4, and 5. This being wave 3, this being wave 4, this being wave 5. Okay. Now, my anticipation is this. This is a 1, 2, 3, 4, 5 wave A move. This is not a tradable wave according to the rules. What you want to do is anticipate that a retracement is coming, and this is possibly a bullish zigzag. A bullish zigzag. So if I don't trade with the fib, but if I were to trade with the fib, I gotta have to let the market diverge and change character, right? Because it has to finish this wave. Okay. So what I'm saying is, since the market broke up above this old high, created a new one, the market's gonna do what? Diverge, change character. And I guarantee you, without looking at the RSI on the M1 time frame, that this thing is overbought and is attempting to create a bearish divergence on the RSI. So what I'm saying is this is slanting upward like this on the candlesticks, and on the RSI is going to be slanting lower from the top. Watch. See? When you understand how a market prints, you understand how a market prints. I'm using Elliott waves as a GPS, as a guide. This is not a tradable wave according to the rules. I'm looking at this as a 1, 2, 3, 4, 5 A wave. So this is let this wave come out. So the market already did this 1, 2, 3, 4, 5, right? This is what the market is printing now. This wave right here, from here to here, is printing this wave. So now that I'm identifying this as a, hey, I already got my 1, 2, 3, 4, 5. This is going to be what? A 1, 2, 3, 4, 5 A wave. Market is going to do what? Diverge, change character, retrace. And because I'm anticipating a zigzag, and I'm anticipating, just because I'm anticipating a zigzag, because I see a 5 wave A move, you'll pull the fib from here to here, where the divergence happened, right? You pull it from there to there, and then you say, hey, according to the rules, it says, hey, we're looking for the market to do what? Create an ABCB wave that's going to retrace to 50% minimum, maximum 61.8. So somewhere in this zone right here, you'll be looking for what? Your future accumulation for the higher low in order to do what? Create a what? 1, 2, 3, 4, 5 C wave. So this is the anticipated move on gold. You have your 1, 2, 3, 4, 5 A wave, right? You have your 1, 2, 3, 4, 5 A wave. So right here, like this, 1, 2, 3, 4, 5 A wave, right? We're gonna say, hey, this is a big gigantic A wave, right? Then we're looking for what? ABC, A, A, B, C, B wave. Remember, 50% minimum, 61.8% maximum, because those are the rules for a zigzag. Because we're saying that this is a 5-wave A move, and a zigzag normally stops between 50% minimum, 61.8% maximum. I'm not trading it based off the fib. I just know that, okay, I'm looking for ABC B wave to complete, so then I can get in for my buy to catch the what? The next 1, 2, 3, 4, 5, which will be what? Wave C. So we're saying this is going to be ABCB, right? And then we're looking for the what? Get in off of that, and we're looking for the 1, 2, 3, 4, 5 wave. Oh, hold up. Then we're looking for the 1, 2, 3, 4, 5 wave C. That makes sense? That makes sense? It's not confusing when you understand it. It's not confusing when you understand it. So I'm telling you, I'm not looking to take the sell purposely because it's not a tradable wave. It's not a, you can take it for a sell. I'm not saying you can't take it for a sell, but what I'm saying is, according to the rules, the discipline rules, incorporating the discipline rules of Elliott waves, this wave right here is not a tradable wave. Wave A, they say let it come out because we want to identify, do we have 5 waves in wave A or three waves in wave A? Depending on how many waves are in wave A, we can better prepare ourselves for what wave B will produce. So because there's only one version of a zigzag, if you have 5 waves in wave A, there's only one version of a zigzag. So I'm intentionally not trading this bearish retracement. I don't have to. I don't need to. When you in trading the ABC, the only tradable wave is wave C. So you let wave A come out, produce. I see 5 waves. Okay. Let B come out, produces ABC, B wave. Then I'm gonna look for the bullish move. Then I'm gonna look for the bullish move. All right. So we can erase all of this. I already know what I'm looking for on gold. I'm not saying what's going to happen. I said I know what I'm looking for based off the waves that have produced. See how the market is going bearish now? Why is the market going bearish? Because the market broke an old high, this low, broke an old high, create a new one. Now it has to diverge. It has to diverge. Has to pivot, come back down. Has to pivot and come back down. I'm not trading that. I don't need to. Don't need to. I'm incorporating, like I said, I'm combining Elliott waves mixed with Elliott waves mixed with the Wyckoff method. Elliott waves are the GPS, that keeps you disciplined. So I'm intentionally not taking this move because it's not a tradable wave according to the Elliott waves system. I'm intentionally not trading this pullback because it's not a tradable wave according to the Elliott wave system. So I'm keeping myself disciplined because of the rules. Now, right here on the 5-minute time frame, this is an engulfing candlestick. Can the bulls come in from here? Absolutely 100%. But you're not going to know unless, if you want to trade this particular area, you're not going to know unless the market does what? Create a distribution, redistribution, and then it has to do what? Create an accumulation right here. It creates a distribution, redistribution that gets to this level. Then yeah, look for the market to react right here, go bullish and look for your accumulation. But me, I'm not interested based off the way I trade. So like I said, this could be a nice sell. You see how, okay, this took out this low, is retesting what? This is now what? A bearish imbalance. This is now a bearish impulsive move from this high to this low is a bearish impulsive move. You're looking for the market to do what? Retrace this impulsive move to then do what? Sell off. You got this high, went to this low. You're looking for the market to retrace and respect this impulsive move to then do what? Sell off to the downside. Respect the impulsive move, create a lower high inside of here, and then move on to the downside. But you want this to be accumulation, reaccumulation, respect the supply zone, and then go back bearish. So now you're having what? A bullish retracement. This is your bearish impulsive move. Right now you're having a bullish retracement. You can see the accumulation, reaccumulation inside of here, right? So now I may take a sell. I may take a sell. Let's see what's up. So I got to look at my range, what I'm working with. And I only take it based off the close of the candlestick. I don't take it based off of while the candlestick is cooking and brewing. My whole theology behind it is close of the candlestick gives me confirmation. Close of the candlestick gives me confirmation. And I've saved myself a lot of headache and a lot of pain and turmoil when it comes to trading emotionally from that. Be like, oh, well, I saved myself. So it's probably creating more of a divergence. As you can see, because now the market's probably doing what? Attempting to come up here on the RSI. Right. So it's probably creating more of a divergence. So what happened right here was that this was a higher low that came off of this level right here. See that there's a bullish engulfing candlestick right here. So this is a higher low that came off of this area right here. So this is a higher low that did what? Broke structure and created a new high. That's what happened. So the market just did what? Accumulated, reaccumulated, broke this old high, created a new one. So now the sellers got to come back into the market. And they're getting ready to come in because the market just did what? Broke an old high, created a new one. So now the market has to create what? A distribution. So me personally, I'm waiting, knowing that the seller's got to come in. I'm possibly waiting on another engulfing candlestick because an engulfing candlestick shows completion of a market price cycle. I'm not really interested in this because this could do what? Retrace, come back down here and mitigate this reaccumulation and push back up. So I'm looking for a specific candlestick, a specific representation of the the bears coming to the market. So right here, this will be a what? This right here will be a breaker structure. Right here. This right here, the market just did, would be a what? A break of structure. All right. So here's the deal. On the advanced tip, you may be able to, if you want to be advanced and knowing that this is a 1, 2, 3, 4, 5 A wave, if you want to trade that ABC retracement, you can, but it's a more advanced thing. If you just want to be disciplined with the Elliott waves theory, then you don't trade this bearish retracement that's about to come into the market. Give me a bearish engulfing candlestick. Or when the give me a the bears overtaking the last bullish impulsive move. When the bears overtake the last bullish impulsive move. So what do I mean by bullish impulsive? Right now, the bull's in control because what you have green candlesticks, red retracement, green push, red retracement. What I want to see is a red push. I want to see the red overtake the last bullish impulsive move. Okay. Right now, the bulls are still in control. The bulls are still in control. See? The bulls are still in control. You got to realize this. You got to understand the market. From this low to this high, retraces. So the bulls cannot let the bears break this low. If the bears break this low, that's called a change of character. Okay. But it doesn't mean that the trend has changed. It's just called a change of character. And it just means that the market has changed character in this particular area. That's what that means. You got to understand every single candlestick and every single move, and the market is moving on in an intentional way. Like I said, but I'm anticipating a bearish drop. Yep. Anticipating that bearish drop. Doesn't have to come off a specific supply zone, anything like that. Just sitting here waiting on it. And this is at least right here going to be TP1. This particular zone that I zoned out. And I use the horizontal raise on purpose. I use the horizontal raise because you look to the right, it'll give you the actual price number. And then I'll do something like this. Hey, what's my pips in the zone? Okay, we're looking at roughly a 8 pip zone, right? A 8 pip zone, 8 to 9 pip zone. So, okay, if I decided I wanted to take a potential buy entry from here, all right, then I'll say, hey, you know what? My stop loss is going to be roughly about 8, 9 pips if I was looking for a buy right here. And then I'll have my lot size already predetermined. All right. So, like I said, we're looking for sellers to come in. Got a bullish engulfing candlestick right here. This is a retracement. Are the bulls going to prevent this engulfing candlestick from being broken, or are the bears going to be strong enough to do what? Break below that engulfing candlestick? If that is the case, that will be a change of character. But a change of character does not determine a change of trend. And a break of structure shows continuation of a trend. So we're going to see what's up. I got about 15 minutes left. Okay, so it seems like the Bears have taken over and changed character, right? Made it official. The market retraced and it did not respect this engulfing candlestick. That becomes a change of character. Now, what we want to see is, hey, now that you changed character, are you going to come back to refill this bearish impulsive move? And are you going to create a lower high in order for the lower high to do what? Go down and create a new low. Are you going to do that? That's the next question. Are you going to do that? That would be the very next question. Are you retracing to respect this bearish impulsive move, or are you going to take this high out? That's the next question. So we got to see what's up. Got to see if the market is going to start beginning to create what? Lower highs and lower lows. Let me see what's up. Mm-hmm. Don't worry, I got my cell over here on the other screen brewing in case it happens. You see how you keep yourself disciplined? You see how you keep yourself disciplined? See, the market had changed character, but a change of character does not determine a change of trend. I'm telling y'all, it's the stuff that they give you. They give you these traps in the market. You don't understand how market prints. Trade stop loss getting hit, stop loss getting hit, stop loss getting hit. So the market has officially changed character on the M5 time frame. Here's the divergence. There's the change of character, right? So it may just be what? Going for the supply zone. It's okay. It's okay if it goes for that supply zone. Absolutely 100% okay. But we're not going to chase the buy into the supply zone. I'm preparing myself for the sell setup. I got about 13 minutes left. I'm going right at an hour. So, we can look at Bitcoin. The chart that never stops printing candlesticks, right? The chart that never stops printing candlesticks. I erased everything on Bitcoin. I'm pretty sure I did. Cool, I did. That's what's up. All right, so this is a break of structure right here. Bam. All right, you got your accumulation and reaccumulation that led to what? Bullish break of structure, right? Then you got the market doing what? Pushing down here, respecting this reaccumulation right here, creating a low. So you got basically this. You got this high, this being a high, this right here being a low. Go for candlestick, accumulation, reaccumulation, high, low, accumulation, reaccumulation, broke this structure. I'm gonna let you out in a bit, baby, okay? Be patient with me. I understand. Come here. I understand. I understand. Okay. It's okay. I understand. All right. So we come down here to the weekly, right? Give me a few minutes, okay? All right, let's see what's going on. Okay. Here's the deal. On the weekly, watch out. Get down. Okay. The market retracing on the weekly, we have this engulfing candlestick right here, right? The market creating this high, right? On the weekly, and then it went to this low, right? So now you need to think, hey, is the market going to respect the high of this engulfing candlestick, or is this low going to accumulate, reaccumulate, take this high out and create a new one? That's the question for the weekly, right? That is the question. Okay. So now you have what? This daily. You see the high. You see you see the engulfing candlestick imbalance, right? On the daily. So that could possibly be a lower high. You got the daily supply zone, right? So now you got the market doing what? Possibly creating a lower high right here, because you can see I can see how the market is slanting right here on the daily and creating a divergence on the lower time frame. So I'm gonna make that red, right? And so, but here's the deal. You got this impulsive move right here. You got this bullish impulsive move with this engulfing candlestick. So the bears haven't taken over yet. What happened was the market just did what? Took this liquidity right here. Took this liquidity right here. So the market did this. You have an accumulation, reaccumulation that took out an old high and created a new one. So then the market creates a what? The sellers for the sellers to come in, because you see this engulfing candlestick that's representing a lower high, right? So the market did what? Took this low, accumulated, reaccumulated, took out this old high, created a new one. The bears got to come into the market. So here's the deal. We got to see how much control the bears want to have, right? So you see how price is diverging. You can see it on the 4-hour time frame. I can see how the market is doing what? Slanting upward right here, right? And I even told you on the daily that it was doing a slant. And then it's slanting lower on the RSI. Watch. Look at it. See? Told you. So the price on the 4-hour time frame has diverged and has changed character right here. This is a change of character because this is the last area where the market did what? Accumulated, reaccumulated, took out this old high, created this new one. So now this is a 4-hour change of character below. And so now you got to say, hey, is the market going to do what? Come back to this supply zone and sell off of it and create a what? A new lower high, a new distribution, or is the market going to keep on going down? We don't know until the market prints. All right. So, but you can see how in this particular area, you have what? Price tapped in right here, created what? Higher low, did what? Broke structure, created a new high, right? On the 4-hour. So you had this low right here, engulfing candlestick, right? You had this high, the market created this low right here, broke structure right here internally. It's what you call substructure. The internal structure is called substructure. Okay. And so bam, the market is reacting off of this engulfing candlestick. We go to the 1-hour time frame. Boom. See what we're looking at. Because this is a reaccumulation in between here. So it makes sense for the market to be reacting off of that level. Not saying it's going to go bullish, but to have a bullish reaction. So now we need to see what's in between here, right? So let's see, let's go to the M30, M15. All right. So look, you can see how price has literally diverged and changed character on M15. I could see it without even looking at the RSI. This is a divergence. This is slanting lower, and on the RSI, slanting upward. See? All right. So now what we have is that, okay, you want to count the waves? Okay, we have what? 1, 2, right? Accumulation, reaccumulation, change of character, wave 3, boom, possibly a pullback for wave 4. This is probably a 1, 2, 3, 4, 5, a wave. Okay, so this right here is going to be a change of character. Oops. This was the last lower high in the market, so the market changed character right here, right? 15-minute change of character above. Go down to the M5, see what we have. We have what? 5-minute engulfing candlestick right here. So you can do this. Unmitigated engulfing candlestick. Boom, boom, right? Remember I said do the horizontal raise, so you can do what? Take the rule and find out the pip range like this. Okay, cool. That's about what? 35 pips, right? 35 pips. This particular area, right? So now that the market, created a what I consider what I'm anticipating is the market creates wave 3. This will be a pullback for wave 4, and then it'll pop up again and create a wave 5. That's my anticipation. All right. That is my anticipation. This is wave 3 of the Elliott waves. Is doing a pullback for wave 4 to push up and break above this high and create a wave 5. That is the anticipated move, because I see, remember, the divergence is always made up of waves 3, 4, and 5. Doesn't matter if it's a wave 1, wave 3, wave 5, wave A, or wave C. Okay. But this is a 1, 2, 3, 4, 5. And in between here, I see a wave 1, wave 2. Bam, the market breaks an old high, creates a new one, wave 3, pull back for wave 4, then pop up again for wave 5. Boom, change character, create an ABC, and may want to come back to this level. I don't know. Only God knows. You know what I'm saying? So you have options, but you just gotta let the market reveal itself and let it print. Reveal itself and let it print. That's mainly it. Let's go back to gold. Went straight for that supply zone, which is A-OK. Because once we have a bullish change of character, the bullish change of character happened, and it went straight for the supply zone. So guess what? That makes me think, hey, this was supposed to be, this bullish move right here was a retracement. It did not come back to create a higher low. After the change of character right here, the market just went straight for a supply zone. Boom. You now will be looking for sales. That's how that works. I don't chase the buy. Not a chaser, because I don't drink anyway. All right. Oops. Bring that back. There we go. So now you would be what? You'll be looking for sales. You'll be looking for sales because the market is going to what? A 5-minute engulfing candlestick supply zone. But I'm not going to force a trade. I am not going to force a trade. I got less than 2 minutes left. I got 58 minutes and 20 seconds on this live. And we got less than 2 minutes left. Any questions, problems, or concerns? All right. I'll let it down a bit. I'm almost done. I got a minute and a half left. I got a minute and a half left. Anybody have any questions, problems, or concerns before we end the live? You got approximately 40 seconds before we end the live. If you're not a part of the free Telegram trading group that community that I run, the links will be in the description below this video. Download Telegram from your Google Play Store, App Store. Come back to this live video, and it's a trading community and trading signals. And you just simply add yourself to the chat. We do personal self-development in this family. So the books of the month. So this is something that I came across on my Instagram feed. It says the average millionaire reads 2 or more books a month. So that's my personal crusade and my personal goal for myself, become a millionaire and billionaire. So the 2 books that I am reading for the month are this: the Roadmap to Financial Freedom A Millionaire's Guide to Building Automated Wealth by Brennan Schlagbaum. He is a certified personal assistant. Not certified personal assistant. CPA stands for Certified Public Accountant. Excuse me. He's a certified public accountant out of Dallas, Texas. Has a wife, two daughters, and every purchase of this book goes to the discovery and research of Dravet syndrome, which his daughter Logan has. So he does not profit from this book. It goes to the research for Dravet syndrome. So I purchased the book in college. I was studying to become a CPA. Unfortunately, I did not get my degree 4.5 years, but because I had other plans that I wanted to do in life. So, hey, this is one of the books that I'm currently reading right now. I am in chapter 6 right now. And it's a very great book. Very, very great book. What you're going to do is he teaches you how to first track your money. Number one, track your money. Number two, then grow that money. And then number three, protect that money. Okay? Track, grow, and then protect in this book. All right? In this book. Was over $300,000 in debt, him and his wife. And at 24 years old, being married. And then fast forward 5 to 6 years later, hit millionaire status at the age of 30. All right. So he also has a program called the Budget Dog Academy, where he teaches people wealth and finance. So, hey, Brennan Schlagbaum, bought it off Amazon. The other book that I am reading, once I finish reading this book, that's also one of the books of the month for us, is The Disciplined Trader by Mark Douglas. This book was released in 1990. Developing Winning Attitudes. Developing Winning Attitudes. The Disciplined Trader by Mark Douglas. Okay. So it gives you how to become a successful trader psychologically, from the psychological level, the human psychology, right? So you want to become part of the free Telegram group. That's what we have. That's what we got going on. Going to almost finish reading this book probably this week, and then start on this book. I will finish reading both of these books before the month is over with. Like I said, my goal from here on out, this year, next year, years to come, as I'm continuing living, I'm reading at least minimum 2 books a month, because that is the standard, the requirement, and the prerequisite. And I read that even billionaire Warren Buffett spends 80% of his day reading books. So you got 24 hours in a day. 80% of 24 hours is 19 hours, like 19.2 roughly. So 80% of the day he spends reading. I think he reads like 500 pages a day, something like that. But yeah, there's something that you want to do, hit billionaire status, such as myself. You have to do the prerequisites, 2 or more books a month, right? And these are the 2 books that are in my trading Telegram group. All right. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It has always been greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, productive rest of your soulful Sunday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many, be the one. All right, you all take care. We're going to have a safe, blessed, productive week, safe, blessed, and profitable week. Watch out for those icy roads in the winter conditions, especially out here in the H. And yeah, looking for a profitable week ahead. All right, y'all take care. Salute. I will be on live on Zoom at 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time. And as always, may God bless. Y'all take care.